Hello everybody and welcome back to another video. In this one we're going to be talking about bearish candlestick patterns. Okay, so similar to the bullish candlestick patterns, okay, we know that there's lots of different types of candlestick patterns that we can identify in the markets to either give us a bias for bullish price action or bearish price action. So in this video we're going to focus now on the bearish price action, okay, looking at how we get trends moving up, okay, and then these kind of bearish candlestick patterns at the end of moves, okay, and then how they then cause reversals back bearish. Okay, so we want to be looking at the bullish to bearish moves and how these candlestick patterns can actually give us a little prediction in time that we're going to be getting these runs. So we're going to start this all off, okay, by looking at a high test candle, okay, and we're going to be seeing these high test candles at the end of upwards trends, and this is what it looks like. So let's get into that now. Okay guys, so as you can see here, this is what we call a high test candle. Now, why is this a high test candle? Well, as you can see, similar to the low test candle, we actually have now a wick in the upwards direction, okay, and then we have that smaller body in the lower half of the candle. Now, if we were looking at an upwards moving market, what we would then be able to identify is that price is actually now rejecting this level, okay? Prices are now too expensive, and what's happening is we're seeing how price did move up but then immediately retraced back down, okay, leaving behind this wick, which is the little breadcrumbs in price to let us know that price may actually be moving to the downside. So this high test candle is a great tool to be able to use, okay, when actually identifying some kind of upwards moving price action into an area of resistance and then being able to predict a potential short trade. So this is the high test candle, and now we're going to be moving on to the evening star. Okay, so here you can see, guys, that we have an evening star formation. Now, this isn't quite an evening star doji because the candle in the middle, okay, isn't quite a complete flat doji candle, but we do still have all three elements that we need to class this as an evening star. So what is an evening star? So first of all, we have the nice bullish engulfing candle moving to the upside, okay, showing us nice strong momentum, and then immediately after this we then get that low momentum candle, okay, small body, big wick, okay, and what this candle is showing us, okay, is that price is now consolidating and it doesn't know whether or not it wants to move higher, okay. It's reached an expensive price point where buyers are trying to work out, do they want to keep pushing price higher, or are they happy now to actually no longer buy, okay, which will then drive the price down to a more cheaper level. So we get this, you know, doji candle in the middle, and then we get the nice strong bearish candle to retrace back down the side of the upwards candle, okay, to give us the complete evening star. Now, as well as that, we also have the nice high wick on that bearish down candle, and this is an additional confluence to show us that price tried to actually push higher, okay, after the middle candle, but then immediately rejected that area and started to move down, okay, to the downside. Now, this is a really good indication that price is going to be moving in the bearish direction, okay, and again, if we saw this at some kind of liquidity level or at some kind of area of resistance or a third touch of a channel, okay, this evening star would be a really great way of getting involved in the market because it's enough of a confluence now that price is actually looking to reverse, and that is exactly what we want to get involved with. So let's have a look at the next pattern now. Okay, so here you can see that we have this really nice pair of up candles and down candles, okay, and this is a clear retrace candle. Now, why is this a retrace candle? Because we have momentum pushing to the upside, okay, on the second to last candle, and then we then get a complete retrace of that upwards buying pressure, okay, and it comes all the way back down plus a little bit more and closes bearish. So when I'm actually looking at this, okay, what can we take away from this? So first of all, okay, we look at the upwards candle, okay, the second to last candle. What we can see is that there's also a nice high wick on that candle. So you could say it has elements of a high test. Now, as well as this being an element of a high test, okay, we then get that strong bearish engulfing candle, okay, as the next candle, which completely retraces the complete momentum of the buying candle. So because of this, what it's showing us is that price is likely to now continue to the downside because the buyers are now exhausted, okay, and price is clearly too expensive. So what's going to happen is the demand is going to drop and price will continue to move lower, okay, until it finds an area of support where the demand for price to go higher, okay, will actually start again. And this is how we can actually get involved with a retrace candle, okay, and again, it's a great tool to use either in a continuation at an area of resistance or at some kind of 3-touch ascending channel, or even just in an uptrend in general, okay. If you're seeing an upwards moving price action and then you see a nice retracement candle at a solid level, it's telling us that maybe price is actually going to reverse here, okay, and that is when we can actually get involved in short trades. So let's have a little look at the next candle now. Okay, so the next candle pattern we're going to be looking at, okay, is the bearish engulfing candle. Now, opposite to the bullish engulfing candle, okay, we have a strong body close, okay, in the downwards direction. And what you can see is that we've got very small wicks, okay, and it's a very large candle body. Now, what this is showing us, okay, is that we've had a clear impulsive move to the downside and that people are holding on to their positions, okay, and there is no buying actually happening at this area. Okay, how do we know this? Well, there's no wick, okay, leaving this area, but instead it's showing that price is closing all the way down at that low of the candle, and people are happy with the price, okay, and they're happy to continue to sell this lower. So after you get this an impulsive candle like this, okay, what you may get next is either another bearish engulfing candle, or you may see some kind of correction or consolidation, because as we know, price moves in phases, and this could be the impulsive phase followed by the corrective phase, and then you may see a further bearish move to the downside. So again, this is a great candle to use to work out, are we in a downwards trend? And if we are, again, we want to be looking at how we can actually get involved in continuation breakout and retest trades, okay, which we're going to be looking into in a later episode. So make sure you're aware of the types of candles that we can see, okay, and how, impulses in the market are represented by these nice bearish engulfing candles with large bodies and small wicks. Let's have a little look at the next pattern. Okay, so this candle pattern, okay, is slightly different because what it actually is the initial low test candle which we spoke about in the bullish candlestick patterns. However, we're looking at it in a way to be able to identify a potential move to the downside. So the difference is, okay, this low test candle would be seen at the top of a trend, okay, where we have nice increasing, bullish momentum, prices moving in a nice ascending channel, and then you see this nice, technically a low test candle, but we like to refer to it as the hanging man. So the hanging man, okay, is going to show us how price is actually running out of steam, okay, there's a little bit of indecision there, and what you tend to see when you see a hanging man at the top of a trend is you'll then get a potential reversal. Now, following the hanging man, you may see a nice engulfing bearish candle, okay, and that will then complete our evening star formation. But separately than that, you may just get a nice impulse straight down from here, or you may get a little bit more consolidation. You may see a doji candle or potentially a high test candle, okay, but the hanging man is a really good indication that price may be running out of steam to the upside, okay, and especially if you're at a really good level of resistance or liquidity, okay, being able to identify this candle will come in handy to actually frame up a potential move to the downside. Obviously, of course, you could get the opposite in a downwards leg, okay? The way that we get a nice high test candle, okay, in our moves looking bearish, you can also get high test candles in a downwards leg, and where we can potentially be looking bullish as well. It's just the opposite of this one, okay, depending on which way you're looking. But the key element for this is to make sure you're in the right area, and especially, if you want to trade this hanging man and be looking for short trades, okay, you want to be making sure you're at those nice key levels to identify this, okay, and then potentially frame up a trade. So let's go ahead now and look at the final candlestick pattern. So finally, what we have here, okay, is the tweezer tops. Now, the tweezer tops obviously is the inverse of the tweezer bottoms, and what we're focusing on here, okay, is the nice two high wicks that we have, okay, on both of these candles. Now, by having these wicks to the upside, okay, it's indicating to us that price is rejecting a certain price level and that we may be seeing movement to the downside. Now, as well as seeing both these tweezer tops, we also have a very nice engulfing bearish candle. Okay, you could see this as some kind of potential retrace candle, okay, but the main point of this, okay, is looking at those wicks and the rejection that we're getting away from a particular area. So again, you know, if we're at a certain price point or an area of resistance where we think the price is going to be moving down, either in some kind of continuation or potentially some kind of reversal, okay, if we then start seeing multiple wicks, okay, it doesn't even have to be 2, you may see 3 or 4 wicks, just multiple wicks, okay, we know that wicks are pointing in the direction of loss, okay, and the bodies are pointing in the direction of profit. So if we start seeing, you know, 2 or 3 like large wicks, okay, and then we start seeing nice bearish engulfing candles, we know that price is likely to be moving to the downside, and we need to be paying attention to these clues that are being left behind, okay. And if we're getting this kind of candlestick formation happening at key levels, we can go ahead and set our sell positions because we're now happy that we've seen enough confirmation that price will be moving to the downside. So this is all of our candlestick patterns that we're going to be focusing on. Okay, now what I'm going to be doing is going through some live examples to show you guys how we can actually see all these different candlestick patterns playing out on the charts. Okay, looking at lots of different bearish legs down and the sort of moves and the sort of patterns that we can actually see, okay, on real life charts. So let's get into that now. Okay, so now that we're back on the charts, what we're going to do is we're just going to talk through some price action, and we're going to be looking at these different bearish patterns. So we'll start here, okay, and we'll work our way backwards, just looking at the different up moves and down moves in price, okay, and looking at these bearish legs and where they started and the types of bearish candles that we actually got at the extremes. So first thing I notice, okay, is we have this nice high test candle just in here, okay. What we can see, okay, is that we have this nice rejection wick and this tiny body, which is a clear high test candle, and this shows us, okay, that price is likely to then continue moving to the downside. So after that, what do we have? We push up higher here. What have we got going on in these areas in here? Well, you can see that we have in here, we have quite a nice, okay, retrace candle where we have a nice push up followed by an equal and better push to the downside, okay, showing a clear shift in momentum. As well as that, the very next candle is then again a very nice high test candle just in here because we have that nice wick, okay, and then that smaller body. So we also have more wicks in this candle in here, and then eventually you see that we get that move to the downside. So in this area in here, we don't actually have anything really significant, but we do end up creating obviously some nice engulfing bearish candles, which can be a sign of a potential continuation, which we then saw in this leg of price just in here. And obviously in between that, we had this kind of pullback phase just in here, and what you can see is we then also have these two high test candles, okay, which is a pair of tweezer top candles, and this can indicate even more selling pressure, okay, to the downside. And then of course we then get that morning star and price reverses back the other way. So let's keep looking back in price now and have a look at what else we can find. So okay, we have a look up here. There's nothing really going on. We do obviously have some nice engulfing bearish candles, okay. We get a nice doji candle just in here, which you could also say is a high test candle, okay. And then if we have a look at the next time price was coming bearish, what do we have? So here you can see that we have quite a nice area of, you know, consolidating price action, okay. Again, I mean, you can see that we have doji candles, lots of doji candles, okay, and this is showing that price doesn't quite know whether it wants to go up or whether it wants to go down, okay. It's retracing in both directions, so it's important to make sure that you're in a clear area where you think price is going to be coming down if you're going to use that as your bias, okay. And of course we do have this idea of impulse, correction, and then impulse, okay. So if you were looking, you could be saying to yourself, okay, well, we've had this kind of, you know, 3-touch channel in here, okay, where we've got 0.1, 0.2 and 0.3, okay. We then get those 3 touches followed by this nice bullish candle to the upside, followed by a nice retrace candle, okay, which is equal or better to the body, and then we get these nice consolidation candles. So here would be a great place to get involved in a trade because we've got all of those elements that we're looking for, okay. We've got that nice impulse, we've got that correction, we've got the 3-touch in here, okay, and then we've got those confirmation bearish candlestick patterns. So that's the best way that you want to be using it, okay? So let's have a little look back now at what else we can actually find. So if I just take this off here, okay, what else can we see? So if we continue to move back in price, what we then see in here is that we have a nice high test candle again, okay, a nice large wick followed by a nice bearish move to the downside. So again, the wicks are showing the direction of the loss, okay, and the bodies are showing the direction of the profit. So that's a great indication that price is going to be moving lower in here, okay. And then in here, what you can see is that we have a really nice evening star. So what you can see here is that we have that nice up candle to start with, okay. We then get that smaller kind of hanging man candle in here, okay. You could see that's also a kind of like a doji candle, and then of course we then get this nice bearish down candle, okay, a nice bearish engulfing, which confirms the evening star. So say for example we were looking at this kind of area of resistance, okay, we then get, you know, the resistance, we then get this nice evening star formation. That again would be a great indication to sell price lower, okay, and continue this trend of impulse correction, impulse all the way down, okay, to these lows. So that's just another way that you can look at getting involved in trades here, okay. And it's the same situation all over. So, you know, if we now have a look in here, okay, at the top of this leg, what can you see? Okay, well, we've got a really nice again high test candle in here, nice wick, okay, and then a really small body, okay, with no wick on the downside. And then we also have this really nice wick candle in there as well. So that's another point, okay, where you may be able to trade some kind of continuation, and we'll teach how to actually get involved in these break and retests, okay, a little bit later on. So again, looking at the same kind of thing, you know, if we had an area of resistance in, okay, somewhere such as this, how could we actually get involved in this trade? Well, you can see that we have this large buildup of wicks, okay, in this area in here, which is showing a clear indication the price is starting to reject this area. So first of all, we get this nice high test candle in here, okay. We then get this nice doji candle in this area in here, followed by more, you know, high tests. We get tweezer tops, we get dojis, we get hanging mans, we get everything's going on in this area here, okay. So, you know, from a selling point of view, it looks very, very good, and it's also coming from this large impulse in here. You can see that the last real momentum we had was in this area in here, okay, where we had these really nice, okay, you know, bearish engulfing down candles. So, you know, it's clear that by the logic of, you know, impulse correction impulse, it's highly likely that we're going to see some kind of continuation to the downside. So let's have a little look back in price again. You can, I mean, just literally looking back one leg again, you know, you've got impulse, you've got, you know, impulse correction, impulse, and again at the top of the correction we've got these nice tweezer tops, again showing more, you know, bearish pressure to come to the downside. We have a look over here, what else have we got? So again, you know, more nice rejection candles. You could class that as a kind of retrace candle before that move starts to the downside. Okay, again, another area where price moved down, and you're seeing, you know, these clusters of wicks, you know, where you can see price constantly pushing up to a level, and then it just rejects off of it, okay. It pushes up to a level, drops off of it, pushes up to a level, drops off of it, okay. Again, pushes up, drops away, and then suddenly you get this push up, and then you get this sudden push down, and that's what creates this large engulfing bearish candle just in here. So that's another clear example of, you know, these bearish patterns playing out. If we have a look for some more examples, okay, again in here we've got a really nice clean tweezer tops just in here, okay, two lovely wicks back to back, also a nice doji candle in here, okay, and you could also class that as, you know, two high test candles back to back, showing that price is likely to continue moving lower. And pay attention to whereabouts you're seeing these candles. You know, a lot of the time you tend to see that, you know, they're at the end of a correction, because we know that after a correction we get another impulse. So it's not, you know, it's not by accident that we're seeing these patterns in these kind of areas. And the key is, you know, that we're getting these large impulsive bearish engulfing legs to the downside, okay, with these large engulfing candles. So it's highly likely that, you know, after this move to the downside and this clear wick rejection, that this is the area at which price is going to start consolidating. And then when it does start consolidating, you then get this push up, okay, to certain levels where you then see price start to slow down again with these, you know, high testing tweezer tops, and then price actually starts to move back to the downside with more engulfing bearish candles.
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
So let's have a look at a few more examples. Again, another high test candle in here. You can see clear, big wick, okay, small body, and then you get that move to the downside, okay, so that was more indication that price was moving lower. Okay, even in this down leg, okay, where did it start? Well, again, look at these wicks. Obviously that looks like some kind of news spike, okay, where a news event probably caused very, very volatile price action. But again, the concept still remains that, you get this nice big pair of wicks, okay, and then eventually you start to see, the engulfing bearish candles coming into the market. So you then get another pair of tweezer tops just in this area in here, and then price, you can see begins to actually sell off. So there's lots of different examples, okay, where you can see this happening. We then obviously go into a bullish leg, but again, back bearish and more, more indications. Again, you've got a nice high test candle just in here. Okay, we go to the top of this leg. Areas such as this, lots and lots of wicks, okay, which then shows the right direction of price. Okay, again, more wicks in areas such as this. So you obviously need to tie it in with your, resistance levels if you're looking for sells, and your support levels if you're looking for buys. This is the key concept, and you need to make sure that you're doing it in the right places. Really looking at that nature of the market. Are we corrective? Are we impulsive? Are we ascending? Are we descending? Are we consolidating? Are we showing corrective price action or impulsive price action? Try and find the right phase of the market, okay, and then we're looking to trade those reversals or those continuations. So if we keep looking, okay, again, clear indications that price is looking to reverse, okay, even in situations like this. Every time you get an up candle, okay, you get an equal or better down candle. Okay, here, up candle, and we get a nice equal or better down candle, indicating to us the price is technically, quite indecisive. It's pushing up, it's pushing down, it's creating a kind of range, a kind of, consolidation. But like I said, if we're in a good area, an area where, you may see some kind of resistance, then it's obviously a perfect place to get involved in a potential sell trade. So if we just keep looking back now, see if I can find any more clear examples. We've got more candles in here, another high test candle just in here. Okay, we've got another pair of tweezer tops just up here before this drop to the downside. There's lots and lots of different things that we can actually see as we play through price action. Okay, and as you get better at, actually identifying these certain candlestick patterns, okay, you're going to start spotting them all over the place. So it's important to be able to know where to look for them, okay, and exactly what you're looking for in these particular areas, because we don't want to just be getting involved anywhere in the market. We want to have a nice structural idea about what we're getting involved with, whether that's a nice ascending channel, okay, into an area of resistance, and then a clean, either tweezer tops or evening star formation or a high test, okay, coming out of that area. That is where you want to get involved, okay, not in the middle of price, okay, not, during an impulse. You want to get in the right areas to then trade, the following impulse, okay, avoid the corrections, and then at the end of the correction, that is where we want to be getting involved in the market. So what I would do, guys, is I would recommend you go away for yourselves, go back over this video and the video on the bullish patterns, okay, really, make note of them, draw them out, learn them, make sure you understand how they work, okay, and which patterns that we're actually looking for in, which trends, that we're actually trading in, okay, the certain bearish patterns that we need to see at the, at the end of a bullish run, and vice versa. And it's very important to make sure that you're seeing these in the right areas. So what I would recommend is that you go and do what I've done, okay, get a chart up on the screen, pick a time frame, and just start going through price, okay, maybe, highlight the highs and the lows, and then just kind of see, the types of candlestick formations that you're seeing at these particular turning points. And then what you'll do is you'll start to recognize, oh, okay, yes, that was a high test, that was a morning star, okay, that was tweezer bottoms or tweezer tops. Okay, and then what you'll do is you'll be able to recognize these patterns when actually trading live, and they'll be able to give you the edge, okay, when actually putting a trade plan together, okay, and actually then executing trades either long or short. So I hope you guys all enjoyed this video and took something away from it, and I'll see you all in the next one.
Be a dork.